Hey, welcome. I'm not even going to do the introduction because I'm late as heck on starting this. I had to make sure that I took a bio break. Why? Because that's how life is. For those who are just tuning in and trying to figure out, well, who's this chick on my stuff? I am Patrice L. Berry, none other than the tax cop. Y'all, that view was terrible today. Um, but for those who are on, let's talk about something I think is very interesting. Why am I talking about it? Because we in tax season, and I think it's great to know the difference. And plus, I seen a sexy article. Y'all know it's always something that I want to share with y'all this week that demonstrates very well the difference. So this is going to be very educational. I'm trying to get into the frame on Instagram. Is this where I stand? I know y'all are probably like, the people on Instagram are probably like, I'm sick and tired of her not standing in the right spot. That ain't the spot. This is the spot on Instagram. I'm trying, it's delayed. It's delayed. So anybody who is watching this live, y'all are like, what? What? All right, so this is where I'm gonna stand. Got it? All day. We cooking with grease. I got you. I'm gonna stand right here. I'm gonna keep it. I'm gonna try not to look frozen, but frozen. Let's go through the difference. Let's talk about it, and let's use no site other than Investopedia. I'm working my mouth, y'all. I could have had it all up and pretty and stuff like that, but I didn't. All right, let's look at it. Let's make the screen big. Let's make the page big. Let's make the page big. All right, tax avoidance versus evasion, and y'all gonna see all these daggone advertisements on here because that's what it's gonna be. All right, what's tax avoidance? Tax avoidance involves using legal strategies. I'm gonna stress heavy on the what kind of strategies are we? Come on, this darn mouse. What kind of strategies we using? Legal. There's nothing ill about this. We using legal strategies that we can. We leveraging the code. That's what it says. I ain't make this up. That's what avoidance is. Get out the way. Move. I'm not gonna finish. All right. Anyway, uh, tax avoidance involves legal strategies to reduce the amount of income tax owed by individuals or businesses. Let me make this a little bit bigger because I know it's big on my screen, but y'all probably be like, chick, who you think can read that? There we go. All day. I made it 250. A good solid 250. So you can actually see it. So you won't be guessing. And you won't be thinking I'm making this stuff up. Let me break it down just a touch. Just a notch. Just a notch on the line. There we go. Then it's centered. This a little bit cuter. All right. So tax avoidance reduces income for individuals or businesses legally. These strategies include claiming permissible deductions. Essentially, we follow in the tax code, credits, and making investment choices that offer tax advantages like purchasing tax-free municipal bonds, etc. In stark contrast to tax evasion, which involves or entails illegal practices such as underreporting income, falsifying deductions, making it unlawful. All right, so let's break this down. How can we remember this so you don't be out here in the streets doing crazy stuff you ain't got no business? Avoidance is legal. All of the stuff is legal. ALL. All like the detergent. All of it's legal. Well, how much is legal? All of it. All of it. That's avoidance. And y'all probably like, that's a crazy mnemonic because it's not really a great mnemonic because you don't break down avoid, right? But I want you to remember that if all of it can happen in a legal situation, it's avoidance and we good. We can do that. We can do that there, okay? But evasion is icky. Even look at how I said it with my face and my body language and my hands. Evasion is icky because it's illegal. It's stuff we should not be doing, right? Avoidance allows us to do all the things legally. All. Y'all, this is how I used to have to be like, okay, let me figure out how I'm going to remember something to pass something on a test when I was doing stuff in college. So all of it's good to go. If all of it's good to go, then, and it's legal, that's avoidance. We can do that all day long. It's our normal practice of preparing taxes. It is our normal practice of planning and leveraging the tax code for our business or for our own selves personally so that we are compliant and can take any deduction or credit or leverage anything that's happening right now in the code to our advantage. We following the law that they've laid out for the time being because they can switch the laws anytime they want to. But evasion is illegal stuff because it's icky. It's nasty. It's not stuff that we should be doing. It's underreporting. We know we out here telling all the falsities. Falsity is not a rule. All right, so let's look at these takeaways before we go look at the article. The case. Tax avoidance is legal where we use the code. Distinct from tax avoidance is tax evasion. So that's the opposite. Tax evasion is illegal and involves underreporting income or falsified information. Strategies like taking a standard deduction, saving for retirement, all of that is tax avoidance, and that's what we're trying to do. Essentially, we try to play our fair share. That's it, right? Then the complexity of the U.S. tax code means many taxpayers miss out on potential tax breaks just because they haven't taken the time to leverage or even plan and figure out what they can use to their advantage and what they can't. Sometimes you just don't know what you don't know. That's where tax professionals come in. Not that you have to turn around and turn into a tax professional, but sometimes it's, hey, let me go figure this out. And I'm not saying always get on the Google and you know what I'm saying? And like, I'm gonna fill it out just like this. Let me go on here on YouTube and figure out a video to actually fill it out just like this. Sometimes it's, hey, let me schedule a consult because I've seen this concept and I want to figure out if this concept applies to me or if I can even leverage it. And it's worth me taking the time to make that investment to make sure that I learn the right way to be doing stuff. That's all. That's it. Nothing more, nothing less. All right. While legal tax avoidance can become illegal if taxpayers intentionally misuse tax laws. All right. So it's about everything, because this goes back to like fraud and stuff too. It's about what your intent is as well. So if you know, hey, I'm not about to pay Uncle Sam. I'm gonna give you an example. We're gonna use nice round numbers. I should have put it on a spreadsheet or on a slide or something like that. But we're gonna use nice round numbers. All right, let's say you got $100,000 that you earned in income for the year, revenue for the year for the business, income on your W-2, whatever. We got $100,000. We starting up here, right? And then you leverage the standard deduction. Let's say you single, right? And you're leveraging the standard deduction, which is 15,000 some dollars, right? You don't have anything else, right? But we just gonna make it plain, right? 100,000. We're gonna take $15,000 from it. That leaves us with $85,000. That's what we're being taxed on. And if y'all don't remember, like really, that's the formula. Remember, I tell y'all my numbers. I care about 4 numbers. That's it. That's all. Really, but I have to do certain things to get to them on a 1040. I care about the queen. That's my adjusted gross income. Sometimes I'm looking at her cousin. That's the modified adjusted gross income. I care about taxable income. In this case, in this example, we're using $85,000, right? Because that's what we're being taxed on. Then I'm trying to figure out if I got any credits and anything like that, because now I got to figure out what I owe them people and what I actually paid them people. And so what I owe them people is, hey, the tax bracket tell me this, that, and the other. It say I should be taxed at this. This is what it's supposed to be doing. This is where I fall out on my $85,000 based on my filing status. This is what I should have withheld throughout the year. Now, if I got some dependents in 2025, children under the age of 17 is $2,200 per child, right? As long as I meet thresholds and income thresholds, et cetera, and I'm not phased out, which I don't happen to be phased out in this one because it's $150,000. And so I do all the things. I meet all the rules. I figure out what I'm supposed to be paying the people, what I owe them people. And then if I'm a W-2, they already paid the tax on my behalf. They took it out. Well, I already paid the tax on my behalf, right? They done took out my portion of the employer wages, and then they put they stink on top of it. So I've already withheld some money. That money is over there sitting. The IRS should have the withholding money. That's called trust fund. All right, they have all the payroll taxes. They took them. That's on their W-2. Now, if we're doing this and this is a business, what's going to happen is we're going we're going to have I'm still want to net out to 85,000. We're gonna have some expenses. We're gonna have $100,000 in revenue, $15,000 in expenses. This is before we ever get to um, the standard deduction because I'm still use the thing, right? So then I'm gonna take another $15,000. So that $85,000 is going to become um, $70,000. Now my Kang is $70,000. I'm gonna go to the tax tables, figure what that is as a single person, what tax I owe, see if I did that, and then I'm gonna pay some self-employment tax on that $85,000 I left. So they're gonna give me what I owe, plus they're gonna calculate my portion of self-employment tax, and I either made estimated tax payments throughout the year, or when I file my tax return, I'm paying my taxes. That is a big, broad, quick and dirty example of, hey, I legally did what I was supposed to do. I used what the rules were. As a business owner, I can take certain ordinary and or necessary expenses as deductions on my tax return. I've used the standard deduction, right? Because I couldn't itemize. All of that is within the realm of doing what I'm supposed to do legally, right? But let's say, and I'm going to use the example for the business owner. Let's say I really only I had $15,000 in expenses, but I saw, and I don't want to pay self-employment tax on 85,000. No, because why? I don't want to. So I come up with some additional expenses, right, that aren't real, because I'm adamant that I do not want to pay self-employment tax on $85,000. So let's say I want to only pay tax on $50,000. So I come up with these additional expenses, right, that don't exist. And this could even work for somebody who is a W-2. Hey, I'm not paying tax on 85,000. I don't want my king to be 85. I want my king to be 50. So then people create a business that the person does not have, and then leverage the code that way because they're a W-2 individual. That would fall into the realms of evasion. We don't want to be doing stuff like that. They gonna catch you. Now, whether you as the taxpayer knowingly do this because you're doing your own taxes and you thinking you getting over, hey, I don't like these numbers, I'm trying to get a refund, or your tax professional or tax preparer that you work with does it because they're trying to do you a favor and they want the numbers to come out. And who wouldn't come to them if they don't get refunds? Because people think like this sometimes. And so they're going to put a little bit of sauce on the return. You as the taxpayer, either way are going to be left with that bill. And they're going to hold you accountable for it. How I know? I done seen it too many times. Right? We just gonna high level hit this. How does tax avoidance work? I just told you, right? You can use various credits, deductions, and exclusions. You can claim the child tax credit. You can, if you got an HSA and you putting money into that. If you are putting money into your 401k, if you're claiming the mortgage tax deduction, all the things that are in the code for you to take, you can take those. The children, like I told you, if you got kids and you are within the correct threshold, you can leverage that. For 2025, it's $2,200 per child. But all this got to be in the code. There's other things you have to do where they say families often struggle with decisions on retirement, same as in education, due to changes happening each year. That's when the truth of the matter, tax planning comes into place, because now we got to figure out what the code is so that we can leverage it to our benefit, which is a whole different conversation. But the beauty behind it is tax planning helps us to legally avoid tax. It allows us to get in front of it. That's why tax planning has to be done, not when we're preparing taxes, but outside of that window. So, hey, we know what the tax code is. We know some stuff's going down for the next 4 years. How do I get to leverage those things that actually work in my favor. Or if they don't for this year and I want them to work in my favor for a future year, how do I do it? Legally. What did we say legal was? Avoidance. Because you get to have all of that legally. All right? Cool. Now, I'm not going to use, I'm going to share this article. We're going to make sure y'all get a link to this article because I probably will break it down in my weekly videos that I send in my email clients, but I'll make sure that there's a link in here too because Investopedia is a pretty freaking dope site. I really do like it. But let's go over to this case to break this down real quick. To give you an example of what is evasion. Not like y'all don't know. All right. So in the news, because y'all know I'm going to go to the IRS criminal site every time because I'm nosy like that and I like to be in a business. Westchester construction contractor pleads guilty to filing false tax returns. This happened late last week. U.S. State's Attorney for the Southern District of New York and Special Agent in charge of New York Field Office of the Internal Revenue Service, CI, Criminal Investigations, announced that Philip Castracuco, I think that's how you say it, pled guilty today to filing false U.S. individual tax return before the U.S. District Judge in White Plains Federal Court. So we knowingly been filing incorrect 1040s. He admitted that he filed false tax returns that underreported income for his business. He attempted to pay his full obligation back to the government, and they coming back and they gonna get it all. Why? He's now pled guilty to a federal crime and faces time in prison. Cheating on your taxes is stealing from your fellow New Yorkers. Now y'all know where y'all tax money go. Now this gives me to a whole nother discussion on a whole nother day where people are like, hey, how do I get out of paying taxes? We know where our tax money is supposed to go. We know how our tax money is supposed to be used. Now y'all see, this is what they stressed. Hey, you didn't pay your fair share. And because you didn't pay your fair share, we holding you accountable. That can end up into you getting a stain on your record. You can end up with jail time and definitely paying fees and fines and other restitution. All right. What did he do? He concealed income from the IRS and evaded the payment of taxes, contributed to our nation's tax gap in the process. They put this on heavy. This is sexy language. With today's guilty plea, he's being held accountable. This outcome demonstrates the strength of our investigative efforts and our commitment to safeguarding the public from financial misconduct. He now faces the consequences of choosing fraud over compliance. What? He was an owner of a contracting business. It performed construction work, primarily masonry projects in Westchester County. From 2017 through 2022, he caused Company One business receipt checks in a total amount of more than $3.5 million to be cashed through a check cashing business and converted to cash. So he got paid the right way, and they didn't want no audit trail, so he converted it to cash. Interesting technique. Rather than deposit it into his business bank account, he used the cash to pay salaries and wages to himself and employees for other items purchased for his benefit and for materials used by his company. This is Company One. Now I'm going to tell you right now. Not only did you get paid, right? Which is crazy. You did the work. Somebody gave you a check. Instead of putting the check into your bank account for your business, what he did was he decided, I'm going to go to the check cashing page and they going to cash it. And I'm going to pay, not only am I not going to put that money in, I'm going to start paying everybody because I'm not going to pay payroll taxes either. I'm going to pay everybody in cash. So now we talking about trust fund stuff that you did. You just was out here just doing whatever you wanted to do because you ain't want to pay that. And if it's not in your bank account, then it didn't happen because, as we know, for most businesses, we use financial statements to prep it. People say, hey, they don't know the cash I got. Them people gave you a check, bruh. From 2018 to 2023, he went to the IRS. He filed his 1120S based off of the information that was included on his financial statements. He omitted the aforementioned checks and more than $1 million of salaries and wages paid by his company. He also, so like I said, essentially not only did he mess with his S corporation, which is an 1120S, he messed up with his 1040, and he got trust fund issues because he ain't do what he was supposed to do to pay payroll taxes. And I know payroll taxes are heavy. I get it. I I have to pay myself a W-2 because the company got to pay the portion, so the money got to be in the bank account. But even if he did it, let's say more than 3.5 million. So he received the money. He was doing the work. $3.5 million. Then think about it. He had $1 million that he paid in salaries. Now, of course, that's the free money. That's free balling money, right? That he did. Free balling probably wasn't the best thing to say, but free balling money. Um, that's not even the taxes that's supposed to be on top of it. He could have leveraged them expenses as an S corporation all day long. That's ordinary and necessary expenses. Those are business deductions legally that he could have used to avoid paying tax on $3.5 million. Now he might have made more than that. We only know about the 3.5 million. He could have legally paid. He could have legally leveraged this stuff in the right way all day long. He got the right to do it as a business owner of an S corporation. Now any profits that's left in the business is gonna pass through to him and show up on his personal tax return, right? Which is how they getting them. But you gonna say your business ain't had no money, you ain't do nothing, and then you paying people in cash. Well, he probably had some because he underreported. It's not like he didn't report it all. He underreported the amount of money he got. There still was an audit trail because somebody gave you a check for you to go to the cash place check to cash it. All right. He pled guilty to one count of making and subscribing to false U.S. individual income tax returns. The sentencing on that carries a maximum of 3 years in prison. He got to pay restitution. So not only did you do this, sometimes we got to think about what happens on the other end. Yeah, in the moment, it sounds good. And there may be a reason why he might have done this, right? It said he emitted more than $900,000 of business income from the company. But he could have had some expenses that he could have put on there that would have got ate up, and it would have been a net zero anyway. You got the money that you put in, the revenue that you put in, you take out the expenses, you only being taxed on what's left over. That's why I gave y'all the example I did before. Remember, we only being taxed on what's left over. Only to then have to pay not up to 3 years in jail, in prison. I'm sorry. Let me not downplay it. Prison. He got to pay restitution in an amount no less than $359,656.57. And your business ain't gonna get no more. I don't know how it works, but your business is gonna be questionable. People are not gonna want to work with you. So you might have something that you built from masonry. Come on, that you built. You can't take advantage of any longer. Sometimes we're doing that, and life at the time, the decision we're making at that time. Now he did this over a span of years, 5 years, right? 18 to 2023, 17 and beyond. And I'm not going to say I knew what triggered it, because before then he might have had some back taxes and it was kicking his butt. And he was like, yo, I can't keep paying these taxes. But you can't evade to overcome paying the tax that you're supposed to pay when you could have leveraged and legally avoided paying the tax you didn't have to pay. You only supposed to pay tax on your fair share. Now, I know y'all like Patrice, tax cop. I feel like I already give them enough. I give them my time. I give them my energy. I got to do this. I got to commute. I get it. I don't make the rules. I just know we need to do a better job of adhering to the rules. And in the process, we got to start setting money aside to help us get through some stuff, especially now. There's just a lot of things happening right now at this time, in this day and age, with stuff floating the way it is. It's not cool. It's not fun. I get it. I understand. But we got to start setting reserves aside so that we don't feel like the only thing we can do is evade taxes. Because that joint ain't cool for none of us. None of us going to come out in the end where we could be the source of income for our families, end up in jail, in prison. Let me not downplay it. In prison and still have to pay restitution. That's a temporary fix. we got to actually come up with plans to make sure that we leverage all the things that are given to us. I think the topic of tax avoidance versus tax evasion is a sexy topic, not just because it is tax season. I think it's convenient because it is tax season. But I think we just need to move smarter. That we need to figure out what we can leverage and what we can't leverage. And if we don't know, do some research and schedule time with somebody who does so that you can get in front of it as best as you can. And even if the outcome is that you can't leverage but but three of the rules that are out there in the tax code, leverage them to the fullest. If you find out you can only leverage five just because of how the tax game is laid out, leverage them to the fullest, because then you can start to plan and put some stuff in position, right? To be like, all right, well, what I got to do to make passive income? Because passive income is taxed different than active ordinary income. What do I do to offset my ordinary wages? Okay, maybe I do a legit business and not a hobby. How do I turn this hobby into something that actually is a profitable business that I can leverage against the wages I'm making? And then down the road, eventually, if it starts to outdo, right, or pay me or reward me, I'm gonna say it that way, reward me more than a W-2 because I put this in and I built something that I can scale, then how do I leverage that and shift? Am I in the right entity? What things can I do to make stuff win and leverage the code to my fullest? I might can start out and only can leverage three things. But if I get to the point where now I'm learning more and I can leverage 10, but it takes me 3 years to get to leveraging those 10 versus the three, and it puts me at a point where I'm paying less in tax individually, why not? It takes time to do it. It takes time to do it. It takes education to do it. It takes you stepping out of your comfort zone to learn something new. And now is a good time to learn new stuff. Stuff is evolving so quick and changing. And every day it feels like it's something new that some days it's like, is it even worth it to try to learn something new? I want to encourage you and give you hope that it is. And it don't have to be tax. But down the road, if you're building something that grows into something beautiful and massive that you created, or you learn something new that allowed your money to make its own money to grow, and now you can leverage passive income at the same time you're working for someone else, I think that's pretty cool. It turns you into a different person. I love 7 Habits of Highly Effective People. That's one of the courses I've taken that changed my life dramatically, drastically, because some of the habits I really like are seek first to understand, then be understood, and begin with the end in mind. Right now, today, I'm here, but I know 5 years from now, I want to be here. I have to start today with the end in mind. And yes, I got to put in the hard work to get there, but I know it's going to be worth it once I end up at that next destination. Not just because, hey, it may save me some money, but it's who I become along that journey that I'm excited to learn about. And so that's what I want to leave y'all with. Stuff is changing. Stuff is very disheartening, has been disheartening over the past week. And yes, the tax season is going tax season. There's some things that even I've been looking at that I'm trying to figure out how to best talk about it, that I see that I'm like, but I know in the end it's going to make a difference. And I'm still talking to myself, encouraging my team, and encouraging y'all to still take that journey. Because I promise you, if you begin with the end in mind now, when you end up where you're supposed to be, you'll be happy that you took the journey. And don't be out here evading taxes when all day long there's stuff in the code that'll allow you to legally avoid them. Until next week, I hope something I said resonated with you. If it didn't, I'm going to keep working at it until I find something that does. We appreciate the time that you stopped by and listened to this week's episode of Talks with the Tax Cop. Until next week, I'm out of here, y'all.